How's it going, everybody? And welcome to another episode of Top Buy, Top Sell here in the A1 stock box, where we're going to be going over our number one stock buy and our number one sell stock of the day. Now, don't worry, we are not just taking a look at the stock box today. We are also going to be looking at the Edge Finder. Don't worry, I haven't forgotten about my currency pairs. We'll check these out in just a minute. But because the stock box is so new and because people are loving the stock box so much, I figured that we could start off with the stock box today. So in case you don't know, the stock box is our brand new market scanning software here from A1 Trading that takes a look at some of the most popular stocks from all over the world and is judging it on 4 different metrics here. First, we have our financial score, which would be things like earnings, company earnings, and how well they're doing in that area. The trend score, which is how overall, how is the stock trending itself. The 13F score, which is actually our 13F portfolio tracker here that tracks the largest hedge funds all over the world. You can see all of these different hedge funds here that we are tracking. Right now I have Berkshire Hathaway selected, but I could actually click this and bring in all of the different hedge funds that we are tracking from all over the world. We have hundreds and hundreds of hedge funds, and we can see what they are buying and selling on a quarterly basis, and overall what percentage of these stocks are being held across all of the different portfolios. So for example, I can see that the largest individual stock being held by all of these different portfolios here is Apple, followed by Microsoft, and followed by Nvidia after that. So technology is a big thing right now for these hedge funds and money managers. We also have our top sectors page here, which shows you sectors and ETFs. So again, technology being a big one. That would be things like the NASDAQ technology companies, but also XLK, which is another tech sector here. We also have things like semiconductors, which are like microchips. There are so many different sectors that are basically groups or conglomerates of different stocks all in one, so you don't have to invest in just an individual stock like Apple. You can actually invest in the technology sector as a whole. And then the last metric that we're scoring is our insider score here, which is basically what top CEOs and top company people, whether or not they are buying or selling shares of their own individual stock. If we can get our hands on that information, if that information is made public, then we are factoring that into the score as well. So right now we have 2 very bullish stocks, GEV and FTNT. One falls under the utility sector and the other falls under the technology sector. And I'm pretty curious in technology. Technology is really big right now, like we were taking a look at in the 13F portfolio tracker. So let's check out FTNT just to see what that stock looks like right now and if it's living up to the very bullish evaluation. So here we go. I've actually got the stock pulled up on TradingView here, and over the last couple of days, this thing has absolutely been skyrocketing. Really, ever since August, this thing has been in a serious uptrend, but over the last 5 or 6 days or so, this thing has absolutely been skyrocketing. So don't be surprised if there is a little bit of a pullback. Normally what happens when you have these crazy moves here is you do see a little bit of a correction, right? We might see this thing pull back a little bit before it continues on its upward trend, but right now this thing is looking super bullish. Back in the stock box, let's take a look at our most bearish pairs right now. And right now it's a 2-way tie between 2 competing companies. We have KO, which is Coca-Cola, and we have PEP, which is Pepsi. So I'm going to take a look at Pepsi because in the last video I took a look at Coke. So let's see what Pepsi is doing here with this -8 bearish score. So Pepsi right now is in a bit of a downward trend. We see it pulling back pretty much ever since mid-September or early September. And right now it is currently in the middle of a downtrend. I wouldn't be surprised though if it hits a little bit of support here around this level here, around 161 or so. Maybe dips back up a little bit more, but overall the stock box is saying that this thing is bearish. So I expect it to move a little bit lower here in the next couple of weeks or so. The stock box has so many other tabs that we could take a look at, like our stock comparison, our headline sentiment, the put call ratio, AAII investor sentiment survey, heat maps. The stock box, again, is something that is brand new and is going to be updated as we go along and as we come up with new pages and tabs for it. So if you want to get the stock box in at the cheapest price that it is ever going to be, right now, we are doing our 40% off Black Friday sale, and you can get the stock box or the Edge Finder for the absolute best discount of the year. Again, the stock box is something that is still a work in progress. Just like the Edge Finder, we plan on adding a lot more tabs to the stock box, similar to what we've done here with the Edge Finder. So right now, you can get in on the ground floor of the stock box for the absolute cheapest price that it is ever going to be. Right now, 40% off on our website, a1trading.com, with promo code A1YT. That goes for the stock box, that goes for the Edge Finder, and everything else on our website. Speaking of the Edge Finder, let's go ahead and check out our COT data and retail sentiment. So right now, COT data is showing us some pretty similar information to what we saw last time. This thing is getting updated every week when the COT data report comes out, and it doesn't look like too much has changed at first glance. We still see the Canadian dollar and the Swiss franc here as the two most shorted pairs, followed by bonds. We still see that the dollar is sitting around the 50-50 mark, just barely leaning towards the long side, but really this is just 50-50. It's really way too close to tell. We see the NASDAQ, the Nikkei, and the S&P 500 all in a row right here. Again, kind of leaning towards that 50-50 mark, although the S&P 500 is almost across that 60% threshold that we need to truly consider this thing favored on the long side. And our top three assets here are the same as they were last week. Silver, gold, and ZAR are our most long assets when it comes to COT net positioning. Now, our latest weekly COT filings, we can check what institutional traders have been buying and selling on a week-by-week basis. So from last week to this week, we see that they've added some shares in the Dow. That was our biggest overall net change net percent change here, with 1,077 long contracts added and 2,229 short contracts closed. Overall, the Dow Jones is favored on the long side, 68.23%, and we can see that the total number of long contracts open on the Dow by institutional traders is 24,195 compared to just 11,264 short contracts. On the other side of things, we see that Nikkei has our most bearish net change percentage with an overall net change percentage of negative 8.42%. We see just about 1,000 long contracts closed on the Nikkei and 737 short contracts open. That's a total of 5,762 long contracts to 4,005 short contracts. So overall, it is still favored on the long side by institutional traders. However, their sentiment may be shifting. Again, on a week-by-week basis, we'll have to wait until next week to see what the new report says and see if this number drops even lower. But yeah, it looks like sentiment could be shifting here on the Nikkei week by week. So feel free to pause the video if you want to get caught up on more latest weekly COT filing information. I'm going to move on to retail sentiment, and we're going to check out what our major currency pairs are doing. So these are our dollar pairs, and we see pound dollar, Australian dollar, euro dollar, and NZD USD all favored up above 60% on the long side by day traders. We're taking a look at retail sentiment here. So this is what the overall crowd or overall day traders are doing, and they are buying into these pairs here, which is looking like a bearish indicator for us. USD CAD, on the other hand, is favored over 60% on the short side here. We see it sitting at 75%, and that is a bullish indicator for us. Let's take a look at minor currency pairs next. And we see this big list here, NZD CHF all the way to NZD CAD. All of these are favored over 60% on the long side, and again, those are bearish indicators for us. CAD, JPY, USD, ZAR, and CHF JPY are all favored over 60% on the short side of things, and those are bullish indicators for us. We can finish up here with metals, indices, crypto, and commodities. And we can see that overall day traders are really long all of these things here. They are really interested in buying into indices, commodities, and crypto at the moment. And so those are going to be bearish indicators for us, but they are shorting things like the Dow and the German stock market, the DAX. Those are bullish indicators for us. Let's go back on into top setups. I'm going to remove any neutral biases that we have. And this is our full list of bullish and bearish biases for the day. We have a long list of bullish things, but nothing very bullish. Again, you need a +9 score or higher to get a very bullish bias on the Edge Finder. And at the moment, we don't have any, although we do have a pretty long list of bullish biases and just one lone bearish bias, USD ZAR. So let's take a look at, we'll take a look at Euro JPY. Euro JPY and Euro CAD are both tied for our highest score at +7. We'll take a look at Euro JPY and we'll take a look at USD ZAR. So I'm going to head into data scanners and Forex, and Euro JPY is right here. So it's at the top of our list. Bullish bias, score of +7, COT data is a score of +2, and retail sentiment a score of 0. Now, right now, taking a look at that COT data, we can see that the euro is pretty much 50-50. The COT traders aren't really favored one way or the other. However, our weekly change was positive for the euro, so it wasn't as heavily shorted this week as it was last week. The yen, on the other hand, is being very heavily shorted by COT traders, over 60% here, 63.4%, and the weekly change was negative, which means that it is even more heavily shorted this week than it was last week. So all of that is pointing towards a +2 score for COT data. Retail sentiment, again, a 0 or neutral score. We can see that day traders right now are very 50-50 on this pair. They are not leaning one way or the other. That is why we have a 0 score. Seasonality is a score of +1, which means that historically speaking, over the last 10 years averaged together, the month of November is typically a bullish month for Euro Yen. Our trend reading score right now is a score of -2, which means over the past couple of days, it has been in a bit of a downtrend, but that could turn around soon. Let's finish up with our fundamental data here. We see GDP, retail sales, inflation, and employment change all have scores of +2. Our PMI numbers here are neutral, and the unemployment rate and interest rate data are scores of -1. Taking a look at our economic growth data, GDP A here, this whole A column is going to be our first currency pair listed, and that is the euro. And the B column here is going to be our second currency pair listed, that is going to be the Japanese yen. If you want a full breakdown of all of the fundamental data, we do have all of that. We have our GDP data, our PMI data, retail sales data, all of our jobs data here, inflation and interest rates data with full breakdowns and information and data that goes back months and sometimes even years for all of these different currency pairs that we're taking a look at. But here in the scanner pages, we keep it short and simple. Has the data beat, missed, or met the forecasted expectations? And here we can see the euro beat its GDP expectations, whereas Japan missed out on its GDP expectations or came in lower. This came in higher, and that is going to be a score of +2. We can see that is manufacturing PMI and services PMI numbers for Europe and Japan. All of those were beats there, so they kind of cancel each other out. That's why we have neutral scores there. And then retail sales in Europe beat their forecasted expectations, whereas in Japan, they came in lower than their forecasted expectations. Again, a +2 score there. CPI data, we saw inflation rise a little bit in Europe, forecasted at 1.9%, but came out at 2%. And we saw the opposite in Japan. We saw 2.7% inflation forecasted. It came out at 2.5%. Employment change in Europe forecasted to come out at 0.2%, but came out at 0.1%. That was a negative 0.1% miss there. And forecasted here in Japan at 0 or unchanged, but actually dropped a little bit, -1.3%. And that was a -1.3% change here off of what the forecast was. The employment rate forecasted to come out at 6.3%, and it did. It came out at 6.3% in Europe. In Japan, forecasted at 2.5%, but it dipped a little bit lower down to 2.4% in Japan. So there we go. There is all of the data and numbers backing up that +7 bullish bias here on the Euro Yen cross. The other pair we said that we were going to take a look at was our lone bearish bias of the day, and it's USD ZAR with a score of -5, COT data a score of -2, and retail sentiment a score of +1. Taking a look at that COT data, we can see that the dollar is again about 50-50. The COT traders really don't have a preference whether they are long or short on this pair. However, the weekly change was negative, meaning that it is slightly more bearish this week than it was last week. We see the opposite for the ZAR. We see a positive weekly change, which means it is more bullish this week than it was last week. And we also note that it is our most long asset when it comes to the commitment of traders data. Right now, the commitment of traders data is very, very heavily favored long the ZAR. Right now, retail traders are shorting USD ZAR, 66.69% of them, which again is giving us our +1 score there. Seasonality is a score of -1, which means historically speaking, over the last 10 years averaged together, the month of November is typically a bearish month for USD ZAR. We see our trend reading is a score of +2, which means over the past couple of days it has been trending a little bit higher. But let's finish up with our fundamental data here. We see negative GDP numbers, negative manufacturing PMI numbers, both scores of -2 there, employment change, unemployment rate, and interest rates all coming out with negative scores there. Retail sales is neutral, services PMI is a +1 score, and inflation is a +2 score. Again, same thing here. We have an A column and a B column representing the first and the second currency listed. So in the US missed out, or their GDP numbers came in lower than forecasted. They came out better than expected in South Africa. We see the same thing here for manufacturing PMI numbers. Came out lower in the US, came out higher in South Africa. And we see the opposite when it comes to services PMI here. We had a beat in the US and we had a miss in South Africa. Both the US and South Africa beat their retail forecasted expectations. CPI in the US came forecasted at 2.3%, but came out a little bit higher at 2.4%. We see the opposite in South Africa, forecasted at 3.9%, but came out a little bit lower at 3.8%. We can see the NFP forecasted numbers were 113,000 jobs created. We actually only got 12,000 jobs created, which was a huge miss there of minus 101,000 jobs. That was the forecasted, or this was the forecasted expectation. This was the actual, and this is how much we missed that forecast by. Taking a look at the unemployment rate, it was forecasted to come out at 4.1%. It did. It remained unchanged at 4.1%. In South Africa, it was forecasted to come out at 33.5%. It came out a little bit lower, down to 32.1%. So there we go. There is all of the data and numbers backing up that -5 score bearish bias on USD ZAR. I hope you guys enjoyed this video, and I want to remind you one more time that the Edge Finder and the stock box, as well as everything else on our website right now, is 40% off for Black Friday. You can use promo code A1YT at checkout for 40% off the stock box, the Edge Finder, and everything else on our website. Go check it out at a1trading.com. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.